Welcoming you to Skilled MBA Case Study Series in Accounting. Earnings quality is crucial in assessing a company's true financial health. High-quality earnings are sustainable, recurring, and backed by cash, reflecting genuine economic performance. In contrast, low-quality earnings often depend on accounting choices or one-time items, which can mislead stakeholders about a company's actual financial status. Earnings quality measures how accurately reported income reflects true economic performance. High-quality earnings are sustainable, recurring, and backed by cash flow. In contrast, low-quality earnings depend on accounting choices or one-time items, potentially misleading stakeholders about a company's financial health. Earnings quality is crucial for investment decisions, as investors depend on accurate earnings for valuations. Misleading, inflated earnings can result in poor investment outcomes, distorting market perceptions. For analysts and finance professionals, understanding earnings quality is a critical skill, ensuring accurate financial analysis and informed decision-making. Accrual accounting records revenue when earned and expenses when incurred, allowing for potential manipulation through timing and estimates. In contrast, cash flows track actual money movement, making them harder to manipulate. A significant gap between earnings and cash flow often signals potential financial misrepresentation. Accruals are categorized into non-discretionary, arising from normal operations, and discretionary, where management judgment is applied. Analyzing these accruals involves identifying unusual discretionary patterns that may artificially boost earnings. Such patterns are red flags, indicating potential manipulation in financial reporting. Revenue recognition hinges on contract establishment, determining when revenue can be recorded. Performance obligations are crucial, focusing on the delivery of goods or services. The transaction price dictates how much revenue to recognize, while timing is essential, ensuring recognition occurs when obligations are satisfied. Earnings manipulation can be identified by aggressive revenue recognition, such as recording revenue prematurely. Watch for unusual accrual patterns, where earnings are consistently inflated through estimates. Frequent one-time items, labeled as special or extraordinary, can also be red flags. Additionally, a growing gap between reported earnings and actual cash flow signals potential manipulation. Infosys, a global IT leader, operates under intense investor scrutiny due to its complex service revenue models. Analyzing these models is crucial to understanding potential earnings manipulation. Investors should be vigilant about aggressive revenue recognition and unusual accrual patterns, which can obscure true financial health. Analyzing financial statements begins with basic figures, progressing to key ratio calculations. Identifying unusual patterns or outliers is crucial. Examine footnotes for accounting policy changes. Compare cash versus accruals to assess alignment between reported profit and cash flow. This approach ensures a comprehensive understanding of financial health. Examine the total accruals ratio by dividing the difference between net income and operating cash flow by total assets. Assess days sales outstanding to determine the average collection period for receivables. Ensure revenue and receivables growth align, as they should increase at similar rates to indicate healthy financial practices. Gather 3-5 years of financial statements to identify trends. Calculate earnings quality using specialized formulas to spot inconsistencies. Compare results with industry benchmarks for context. Document findings in a detailed report, highlighting investment implications based on the earnings quality assessment. Evaluate if Infosys recognizes revenue at the correct time. Assess whether accrual estimates are reasonable or overly optimistic. Analyze how effectively earnings are converted into cash. Investigate any concerning trends over time to ensure financial integrity and reliability. In a classroom setting, applying these financial analysis concepts can enhance understanding of revenue recognition, estimation methods, and cash conversion efficiency. Students can analyze real-world cases like Infosys to identify trends and assess earnings quality. This practical approach fosters critical thinking and prepares students for real-world financial challenges. Ensure thorough preparation by reading the primer and understanding key earnings quality concepts. Review essential financial formulas and familiarize yourself with accrual and cash flow calculations. Research Infosys to grasp its business model and industry context. Prepare questions and note areas needing clarification for a comprehensive understanding. Thank you for joining us at Skilled MBA, and contacting Skilled MBA is straightforward. Reach them via mobile at +91 875 53 00795 or email at support@skilledmba.com. For more information, visit their website at https://skilledmba.com. This ensures you have access to expert guidance and resources tailored to your educational needs.